morning, everybody. Welcome to another Daily Market Report brought to you by Mike York. Today is Friday. Happy Friday, everyone. And it is December 11th. We got a couple items here on the economic calendar, so let's jump right in. We'll start with the Producer Price Index. This is the inflation data for the wholesale side of things. So it doesn't always get a lot of respect because it doesn't always, even though sometimes inflation might spike a little bit in the wholesale side, it doesn't always get passed on to the consumer. So we look primarily at the consumer, which is comprised either the CPI report or the PCE report. The PCE has a little bit more weight because that's the Fed's favorite gauge. However, we do like to keep our eyes on the producer price index for possibilities of spikes here and there for consumer. Jump right into us, the headline news for the month of November, we had October, it jumped up 0.3%. Forecast called for a little bit tamer at 0.2%, and it came in much tamer than that at 0.1%. This is the first time we had a 0.1% or lower than a multi, like 0.2 or higher number here for several months here for the producer price index. Now we got the core, which is when you strip out food and energy, which are two variables you cannot control. These are the bases of what we kind of look at when we look at inflation. So it's October, it rose only 0.1%. Forecast is calling for an uptick of 0.2%. And like its counterpart, it went up only 0.1%. So it's year over year, the course year over year went from 1.1% in October, forecast calling for 0.5%, and jumped up to 1.4%. So it did spike even though it only went up 0.1%, but we're looking at over 12-month basis points rolling over 12 months on this. Last but not least, we got the consumer sentiment. Initial readings last month's reading was 76.9 for the month of November. We had a 76.5 for forecast for this month of December. This will be an initial one here, so we'll probably see a different number potentially at the end of the month. But right now we're at 81.4, so we see a bit of a spike for consumer sentiment, which of course we're in the holiday season, so people are probably feeling a little bit more rosy about where things are. Let's jump ahead here to see what's going on with headline news. Stocks are down a bit. It's not so much the data, but they're taking more from these other items here. We got the coronavirus. Of course, we're still seeing increases there. They're feeling a little bit more pessimistic about the stimulus deal getting passed. Also, in Congress, we're trying to get we have up until midnight where Congress might have a shutdown, basically, because they need to come up with a budget, and they're trying to at least kick the can down the road maybe for another week or so. And so we're trying to hopefully see if Congress will stay in session or not. So we'll have to wait and see what happens in that regards. But in the meanwhile, stimulus seems to be kind of at odds again. So the investors are feeling a little bit more pessimistic about anything getting done anytime soon. FDA did approve those. So they talked a little bit about, they decided to move forward with the BioNTech and the Pfizer. So after a vote, and then that at some point will be passed to go move into emergency vaccines to be rolled out. Brexit looks like that could be a hard Brexit. They're both none of the gaps with the visits between the UK PM and the EU president seems to be still they weren't able to close any gaps, and that looks like that could become a hard. So as a result, that seems to be what's affecting the market right now. The pessimism on the stimulus as well as a hard Brexit. Brexit is what's kind of bringing stocks down a bit, and that could lead to a correction. So there are some people forecasting this could be a correction of 7 to 10% in the stock market. So be prepared to see what might happen. So we'll probably see that this month. Here's the mortgage-backed securities. So even though looks like here we started the day much lower, it's not accurate primarily because what we had was every month we have what they call a bond rollover, and this is basically the last day for the December package that will be sold into December, and then this will be starting the first month for January, so the January MBS. So this basically doesn't have any meaning. There's no change in pricing, but right now we will be up 12 basis points from where we left off yesterday. So this could translate into a little bit better pricing. We did have a little bit of a spike, about 8 basis points yesterday, which kind of helped matters out, closing out the day yesterday. And this is kind of helping us out, keeping that momentum today with another 12 basis points. So lenders should be a little bit better in their pricing today, which should be good news for those who are looking to buy or refinance. Let's take a look at the yields. Yields have dropped down a bit and is also testing its 25-day moving average. We're down to 0.88. Yesterday we were right at about 0.93, so that's a pretty big drop in terms of where we were and where we are now. So again, with the disappointment on stimulus, that's helping out yields and mortgage-backed securities, as well as Brexit, because that's what's driving the stocks, and some of that money is moving into the flight to safety for mortgage-backed securities, improving mortgage rates. All right, folks. So again, mortgage rates a little bit of improvement today, which is good news for those who are looking to refinance or purchase. Those who are, if you guys need any help in that regards, please feel free to reach out, direct message me. It'll be the best way to reach me. I am a loan officer and I work with a national lender, and I'd be more than happy to talk to you a little bit about your needs, whether if you had questions about the process or anything, or if we can help you get pre-approved and finance your next property, if you're on a purchasing side, or if you're looking to get a better rate than you currently have, or if you're looking to take some money out of the equity of a property, or different strategies you're looking to utilize. Let's talk, and again, feel free to direct message me, and we can certainly communicate as to how we can see how we can help you guys out. You guys have a great rest of your day. Enjoy your weekend. We'll see you on Monday's video. Bye-bye.